Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 11th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we continue to trade right at the apex of the key range. I mentioned before, 53 quarter into 54 is right where prices have been really chopping above and below over the last few weeks. It's been a major pivot since really the 50s come into play back here in February. So we've been chopping above and below this pivot for some time. We're clearly building energy right now for a major breakout move at some point. And as I mentioned before, the trend remains up. The trend remains up. And even if price were to push down into the LVN, it would still offer an opportunity for bulls to defend and return prices to highs. So at some point here, the expectation is that this range will unwind itself to the upside and continue pushing back toward 2400 and through it into the upside targets. We have 100% expansion target at 2459.75. So that could be the next 100% expansion target with 2424 and 2406 half as the next key levels above. So we could be looking at much more strength ahead. Now we have to see which way does price go first. Does it go down and try to juke us out and then push higher? How is this going to play out? We'll be watching. But right now, trading around the apex, it makes for a very difficult entry or trade location on a swing basis at this time. Let's take a look here at the intraday time frame. On an intraday basis right now, you can see that bears are currently positioned at the previous week's close price and the previous session's close. So here's the previous session's close, here's the previous week's close. And so far, those prices have been offered and defended by bears. We have slight, modest, higher lows right now going into that level. And we have a flat VWAP where price is chopping above and below VWAP and VPOC on a 1-day basis. So right now, we know who's positioned where. Bears are positioned here. That means that their buy stops are above 54s, could squeeze this thing back towards 60, and right now that's kind of been the range short term. So we may see a little bit of movement one way or another, but keep in mind we're going to remain for the most part within the range. So if we test an edge like 60, we could be looking at a fade opportunity back down. Likewise, if we test below 46, 47, there could be a fade back up. So right now it's fade the edges and fade new highs, fade new lows until proven otherwise. Let's take a look at crude oil. All right, here's crude. If we look at the higher time frame of crude, you'll notice right here that crude has been exceedingly bullish, just very, very strong. This is something I cautioned about last week, wherein I mentioned that breaking through back above the 48.50 level opens up a big push back toward 51.71 to 51.52s. We got that trade. I mentioned that bears were likely to come in and defend, but given the strength of the overall trend, we were likely going to see bulls overcome that wave of selling, and it was very, very bullish indeed. A rejection right here occurred right off the 51.71 to 52 zone. Nice rejection tail. The next day, price pushed right through that midpoint and closed well above it. Following day, came in and made support above that zone and continued pushing higher. So right now, price continues to be in a very bullish advance. We have the top end of the range at 55.03 according to this chart here. So this is the top of the impulse range. That is the next upside target, would be between 54.5 and 55.03. So right now, this market continues to be quite bullish. Pullbacks are to be defended, and any selling opportunity should be considered a short-term opportunity right now that's counter trend. Now, if we're taking a look at the intraday time frame, not a whole lot's happening at the moment. We have a very nice trading range that has played out, but there's not really directional conviction at the moment. We're trending up, so that means any new lows, especially toward the S3 band in this LVN, perhaps in the 52.75 or 52.70. Any new lows into that zone could be a great buying opportunity back to value, 52.98, and a rotation into 53.15. Overall, this thing is trending up. So above 53.20 will begin to squeeze. You have bears defending the previous close 3 times. That means you have buy stops building above 53.20. So this could be a great buy opportunity at 52.70 should we see it, for a return to 53.15 and a shot at seeing a squeeze through 53.20 that takes this market higher. So right now, fade the edges with an upward bias. All right, let's take a look at gold futures. Here's a look at gold. What I mentioned in the previous session is that we are forming a major rejection in the daily chart. This rejection right here occurred at the edge of the key range, right at 64.90, right at MCV-POC, which is 63.20, and we see a major rejection day that was left behind right there. I mentioned that given this rejection of the previous low, we would likely see price climb higher over the next couple of days into the zone. But any push into 63s and even as high as 64s there will likely be a selling opportunity for bears looking to keep a lid at the top of that range and a shot at returning price back toward 1230 to 1232 and perhaps into 1200 to 1205 ahead. So right now, watch to see how price responds off the midpoint off that 63s up here. If there's rejection, it could be an opportunity for bears to absorb off that zone, maybe on multiple rotations, for a quick push to 1250 and perhaps even more. Let's take a look at the intraday time frame. There we go. On an intraday basis, again, you can see how price is pushed higher quietly from the previous lows. Previous session's lows here, price pushes up, makes its support, and has climbed higher. Here's the LVN at 64, 63.20, 64.90. Those are all very important levels. So coming into that zone, watch for rejection in that area. At the very least, any signs of rejection could lead price back to VWAP and intraday VPOC at about 1258 as it currently stands. All right, lastly, let's take a look at ZB. Here's a look at ZB. ZB looks very similar to gold. We have a major rejection up here at highs, at the recent highs. Here's a rejection day tail right there. Price coming into the midpoint of that tail into 152.12s, 152.15s, right in that zone. And you're starting to see a little bit of weakness right now. So it's very similar to gold. I'd be cautious in this area if you're bullish because bears are looking to defend in this area at some point, perhaps next week. So this could build out for a couple of days. We could see a full-on return to composite VPOC 149.24, followed by a return back toward the lower key levels. So right now, this is the early indication that we may see a flow backwards. This pullback is going to offer bears an opportunity to get on the train for a shot at returning price to value. Now, if we take a look at the intraday time frame, there we go. You'll notice again, here's the major rejection day right here. Off 152.24 was absorption and price dropped. The previous session we've kind of pulled back, and this 152.12 is the zone right now where bears are defending, right in that area. So rotations into the zone, perhaps a new high. So right now we have higher lows and higher highs. Should ZB pop its head right here above 152.12, watch for signs of rejection that could lead you back down, at least on a short-term rotation, and perhaps back toward lows. All right, that's it for now. Let's see how this market plays out the rest of the session. Good luck, trade well, I'll talk to you soon.